Thank you, Chairman Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs and MRAs that went really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right, first of all, I will commit to working with you on that. We do try to to avoid excessive burden. I think it's fair to take a fresh look on, frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this. After having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from the CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries, and that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.